What seemed impossible a few months ago may now be a reality. The United States may be poised to pull off a soft landing, taming inflation while avoiding a recession altogether. Joining me now is Kitco Senior Market Analyst Jim Wyckoff, and he's going to tell us how to play this optimistic new scenario. Jim, welcome.
Hello, Ernest.
So you produce detailed market analysis for gold, silver, other metals, also equities and currencies multiple times a day. We're going to get into all of that in a minute, but I know you're also following the news and the key economic indicators very closely. So what's your sense of where the U.S. economy is at? Are we nearing the end of the Fed's tightening cycle?
Well, just recently, Ernest, we've had a couple of very upbeat, tamer U.S. inflation reports in the producer price index on Thursday, the consumer price index on Wednesday, that really pivoted the gold and silver markets because there is a sense now that the Federal Reserve may be nearer the end of its monetary policy tightening cycle because inflation appears to be under control and in a downward trajectory.
All right. And so are you buying the possibility of a soft landing for the U.S. economy overall?
Well, it looks more and more likely. In fact, this has been the most broadly forecast economic recession that's never happened. And it appears that we are going to be able to navigate the economy, the U.S. economy, through this without any serious damage. And even if there is maybe a mild recession, that's all it's going to be is mild, but the jury's still out on that. And it appears right now that we are going to come in for a soft landing for the U.S. economy in the coming months.
Well, that's very encouraging. So let's get into the analysis. Let's look at the implications on our different assets. Beginning with gold, we saw gold come off its highs from early May, and many banks in recent weeks have been moderating their outlook for gold. They're pulling back a little bit on their projections between now and the end of the year. But obviously yesterday's CPI sparked a rally for gold. What are the moves in this environment?
Well, Ernest, we've seen a solid rebound in the gold market and a strong rebound in the silver market. This pivot is based upon notions that the Fed is probably going to raise U.S. interest rates by a quarter point at its late July meeting, but then may pause or even stop depending on the new information on inflation in the U.S. economy that comes out in the coming weeks. But right now, there's a growing notion in the marketplace that there may be only one or two more small Fed rate hikes before this tightening cycle's over. That's good for the U.S. economy. That's good for the world economy. It suggests better demand for raw commodities. It has pressured the U.S. dollar index. And as those who follow the gold and silver markets closely know, the dollar index and the metals tend to trade in opposite directions on any given day. So the fact that the U.S. dollar index has just hit a 2-month low, that's good news for the commodity market bulls.
All right. Now, but gold is also potentially going to lose some of the recession bid, right? Gold is fears of recession, also the inflation being under control. This is going to potentially reduce some of the momentum for gold. Where do you think gold is going based on this scenario in the near term?
Well, Ernest, that safe haven bid that we saw based upon a weakening global economy, that kind of left the marketplace some time ago. The marketplace now is focused more keenly on better economic growth worldwide in the major economies, producing better demand for gold and silver. Now, the one caveat I will throw in is that we got some weak import and export data coming out of China just recently that suggests the Chinese economy is still, struggling to grow. So we'll have to watch that closely. But as we speak, the marketplace mood is upbeat about some stronger U.S. and global economic growth in the coming weeks and months.
All right. Now you mentioned silver. Let's take a look at silver. We've been getting nothing but bullish news for silver recently. All the solar demand projections are being revised up. So we have projections between now and 2030. We have annual projections. everything is telling us that demand from the solar sector will be not only very high, but higher than we thought it was, say, 6 months ago. And there's no massive new supply to fulfill that demand. So we've only just started to see a rally for silver in the last couple of days. Do you think this is the start of the long-awaited breakout for silver?
Well, it very well could be, Ernest. That fundamental news that you just mentioned about the increased demand, that's kind of been in the marketplace for some time. It's nothing new. What is new is the apparent Federal Reserve pivot, or the end of the tightening cycle, and that's gotten into the gold and silver markets. Silver is a poor man's gold, so to speak. And I think what we're seeing also in the silver market, it's playing a little catch up, just on some better demand. It's cheaper to purchase. So we're seeing prices. In fact, we hit a 2-month high in silver late this week, and the technicals have turned bullish for silver, suggesting more price upside in the near term.
All right. And we often see a delayed rally for silver. So silver tends to trail gold in terms of moves upward, but then it can also tend to outpace gold eventually. What are you expecting to see from silver in the coming months, assuming that the markets continue this way, assuming that the Fed, the final raise from the Fed is this late July meeting? What could silver do in the coming months?
Well, remember, Ernest, that commodity markets are highly cyclical, and we just in the past several weeks or few months, we've seen a down cycle in silver. We're starting to see that turn. So it's not going to be surprising at all to veteran market watchers to see those cycles kind of reverse course and see some price uptrends in place in the raw commodity market. Now, you want to watch crude oil very closely. Crude oil has started to rebound. This week hit a 2-month high. If crude oil resumes its downward path, that's going to be an ominous portent for the rest of the raw commodity sector, including the metals. But right now, it looks like this better demand scenario for raw commodity markets worldwide, including the metals and crude oil, is going to be able to propel crude at least sideways, if not sideways to higher here in the near term.
Okay. And you mentioned the US dollar. Obviously, a lot of the price movement in commodities is driven by US dollar strength, US dollar weakness. So we see the US dollar index down, and that's helping commodity prices. But looking at the US dollar itself, I mean, we're hearing rumors of a gold-backed BRICS currency. Obviously, we've been hearing those for years, but we're now getting rumblings that there might be an announcement at the BRICS summit in August. What's your take on the US dollar in this environment?
Well, Ernest, as we've seen time and time again with Bitcoin and the cryptos and any other so-called challenger to the supremacy of King Dollar, that's all it's ever been as a challenge. It's never been anything significant. The US dollar is always going to be, I mean, for the foreseeable future anyway, is going to be the world's benchmark for currency. In times of geopolitical uncertainty, you see people want to own dollars or own U.S. treasuries, which they have to pay U.S. dollars to get. So, you know, the currency markets will look at these new innovations, these new cryptos, and these new other assets. But the health of the U.S. dollar, I mean, certainly the U.S. dollar index has been trending lower, but the overall status of the U.S. dollar in the world currency markets has not changed, and it probably will not anytime soon.
So even what are the implications of, let's say, obviously we don't change the global order overnight, but they're talking about this BRICS currency being backed by gold. That's the consensus. We don't know when, we don't know to what degree it would have an impact, but it would definitely be a gold-backed, commodities-backed, but mostly gold-backed currency. And we have these countries with a stronger and stronger reason to want this, stronger than it was, say, 5 years ago. So what are the implications for gold, for the US dollar, but also specifically for gold? If we got an announcement like that in August, what would that do for gold and precious metals markets?
Well, I don't know. We'll have to see, but I do strongly suspect that it's just going to be one more element the marketplace is going to look at. I doubt it seriously impacts the value of the U.S. dollar or gold at all. The gold market is a huge market. The U.S. dollar, the currency markets are the largest markets in the world. The currency markets are way bigger than the stock markets worldwide. So it takes a pretty significant development to change the trajectory of currency markets. And I don't think the introduction of any new currency-backed asset or gold-backed asset is going to make a big difference in the overall scheme of things for the currency markets.
All right. And you mentioned equities. What about equities? Could we be seeing equities really start to take off as markets begin to digest the possibility of no recession?
Indeed. The U.S. stock indexes just this week hit new multi-month highs. So you're starting to see this, and just actually the past, late this week, we've seen the markets move still higher. So that is based upon notions of a less hawkish Federal Reserve, maybe less hawkish other major central banks, again, leading to more demand for paper assets like the equities. So, I do think that there is more upside in the U.S. equities markets. The technicals are bullish and the fundamentals have turned more friendly, given the fact that it looks like we are not going to have a strong recession if we have a recession at all.
All right. And how much pent-up demand do you expect for equities? Obviously, equities have been performed quite well under the circumstances. How much upside do you see if the market were to decide, say by the end of July, early August, after the last meeting, a few more indicators come out, everything looks promising, inflation's under control. What do you expect? How much upside in percentage terms could we expect from the U.S. equities markets?
Well, I don't see, I see a steady climb. There's an old market adage that goes, the stock markets like to climb a wall of worry. And indeed, you can argue that's what's happened the past few weeks as the stock indexes have trended higher despite hawkish rhetoric coming from the Federal Reserve. So the fact that, maybe the Fed is going to ease off on its tightening cycle sooner than many expected just last week, I don't think that's not going to unleash any super buying fury in the stock indexes. What I suspect we'll see is a continued steady to sideways or steady to higher grind in the near term. We're heading into August, however, and that is typically a slower time for trading in many markets, including the stock markets, because a lot of Europe is on holiday during August. So you may see some languishing dog days of August type of trading in the coming few weeks. I think the rubber hits the road after the Labor Day holiday. Traders get more focused on trading instead of family vacations and such. So I think the month of September is going to be extra important for the stock indexes. And it could very well be, and history has shown this, that we may rally. Remember that markets like to factor in expected fundamental events before they ever fully play out. So even as we get good news, potentially good news in August and into September, that's probably will have been factored into stock index prices. So you may see what typically turns out to be bearish months of September and October for the stock indexes. History shows that. We'll see if that plays out again this year. Wouldn't be surprised if that happened.
All right. Well, thank you so much for joining us today, Jim. This has been a great drill down into the potential implications of the soft landing scenario. I guess we should probably be checking back with you mid to late September to see if some of these predictions come to pass.
I think you should.
All right. You're watching Kitco News. Don't forget to subscribe.
Begin your path to financial freedom. Gain up to a $7,000 bonus on us. Register and use promo code. Deposit and enjoy a 7% bonus. Available now. Link in the description.